Good morning, everybody. Happy Thursday. It's October 2nd, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Great to be with you today. Second day of October, second day of trading in the fourth quarter. And so far, with the markets being up the last couple of days, Tuesday and Wednesday, and then following, it looks like they're going to follow through today. Dow Industrial is down about 40 points, though. NASDAQ up nicely, up 141 points, pushing above that 25,000 level on the NQ 100. And then also the SP 500 up about 17 handles. That's to a new all-time high. Roughly opening up here at about 67.30 if the opening pop holds here. Gold's up a little bit, still holding above 3,900 an ounce. Silver's cruising in on $50 an ounce. Twice in the past 50 years, we've seen silver get to $50 and turn right back around to the downside. We'll see if that happens again for the third time. The last time it was about 2011, 2012 when silver made a big, huge run up to 50. Prior to that was back in 1980 when the famous Hunt brothers tried to corner the market in silver and went up to 50. They got busted for that, and silver went down and didn't recover until about another 30 years later. So be interesting to see how that goes. There's been a lot of demand for silver, a lot of demand for gold, hard currencies as the dollar has been getting weaker and weaker versus other currencies. So bond market, pretty steady right now. We've seen some good prints on the high yield. Junk bonds, we've been talking about high yield a lot in the chat room. I've written a couple of articles about it as well too. Why is the high yield market so important? Well, it's kind of a hybrid between equities and fixed income. High yield bonds tend to move much better with equities, and it tells us that the economy is in a much better place than it would be otherwise if spreads were really super wide. Now, when spreads are tight between high yield corporates, investment grade, and treasuries, when the yield spreads are tight, that means the price for buying bonds is rather low, and there's an insatiable demand for those fixed income instruments. And high yield, look, I mean, if you're going to buy investment grade, maybe it's 4%, 4.5%, or you're going to buy treasuries about 4%, possibly a little bit less if you're talking about the 2-year. High yield, if you can get high yield junk bonds for 7-8%, and if the economy is strong and have very little risk of default, you take that every day of the week. So there's been a lot of investment demand for some of that high yield stuff out there. So all in all, I think the economy is in a pretty good place. I heard somebody talking yesterday on CNBC saying that he felt that the economy is slowing down a lot. I don't know. I'm going to disagree with that. I think with the last print we had on the GDP, about 3.2% for second quarter. We're going to come up with a third quarter print. First look at it towards the end of October. I think it's October 25th or 26th. And we're going to see where we're at for third quarter. And I think a lot of estimates have been coming in north of 2.5%, close to 3%, which is above trend growth. So, as it is, I don't see the economy slowing down too much. Of course, the job market has been saying things may be a little bit different. We're going to hear the non-farm payroll report tomorrow for September. That'll be out at 8:30 in the morning. We'll get a read on wages as well too. So we got to pay attention to this data. It's important. Some of the other data that came out this week was somewhat Fed friendly. The ISM and the PMI numbers came in roughly in line, and with lower inflation numbers as well too. So as it relates to the markets, we've had some good strength in some of the technology names. I saw Nvidia yesterday, and today is hitting new all-time highs. Alibaba is moving up towards 200. We've got positions in that. We've seen some of the smaller names that we've been talking about in the chat room have also become well bid. They're moving upwards. Oil stocks and refineries were strong last week and backed off a little bit this week, but they may be good opportunities to add We saw some strength in healthcare and pharmaceuticals yesterday. Merck was up a lot. Pfizer was up a lot. Amgen was up quite a bit. AbbVie, some of the names that we follow a lot in the markets in the chat room. So what do? Just take it cautiously. Always have some protection on, even if it's not working. Always have some puts on. Raise your cash levels today. That would be a really smart idea, especially in front of tomorrow's job report print. Volatility is coming down a little bit here. We did have a big spike in volatility earlier in the week, above 17%, but it's come down. Volatility sellers are active. Dip buyers are active. We had a bit of a dip last week, and that they've followed through to the upside here for the last couple of days. Now, of course, Yom Kippur today. After today, probably going to be a little bit more bullish coming into the earnings season, which starts in earnest next week. I believe the financials will be coming out with earnings starting next week. So we'll be getting a trickle of earnings coming in, but it'd be interesting to see how they perform. Kind of biased towards those financials, towards the banks, like Citigroup. I like JP Morgan. I have positions in both of those. Also looking to be biased on towards the home builders, especially on the longer term. We're talking 4 to 6 to 8 months out on home builders. DHI is one that I like, Lennar and Pulte Homes, along with Toll Brothers and BZH is another one. So take a look at some of those names. Again, the technology names have been pretty reliable. Tesla's coming out with the earnings, with delivery numbers today. I'm not sure if they're already out, but should be pretty good. And that stock is moving up towards all-time highs as well too. So go where the money is flowing, and that's that's where the action is right now. And again, play it cautiously, be careful, take some profits when you have them, and manage your risk carefully. Have a great day. Have a great weekend. I will see you guys all back on Monday. I'll be going to New York City for a couple of days after Monday, so Tuesday and Wednesday, and I'll give you back a report of what I did. It's actually Mayday Day for me. I'm doing CNBC on Tuesday and doing Schwab, Yahoo, and possibly Fox Business on Wednesday, the 8th. So I'm looking forward to spending a couple of days there, and I'll see you guys all back on Monday. Have a great day. And you know he never showed his face.